Today we'll look at the SEC's failure to freeze Binance US's assets, the upcoming Fed rate hike or pause, and analyse the likely response from Bitcoin. In a rare moment of clarity, the judge overseeing the SEC's temporary restraining order, which would freeze Binance's assets, declined their request, instead ordering Binance and the SEC to find another solution. Freezing Binance US's assets would have included stopping them paying salary and service providers, as well as from servicing customer withdrawals, so would in effect have prevented them from operating at all. The stay of execution from the judge has given them a major opportunity to keep their foothold in the US, certainly as the regulatory picture might start to clear up. We've got clear evidence from the Hinman emails released yesterday of SEC corruption favouring Ethereum, as well as mounting pressure on Gensler, including calls for him to resign and proposals for restructuring of the SEC under the SEC Stabilisation Act. This is massive for price action. If this order had been passed, then we would likely have seen a monumental Bitcoin breakdown, as well as in the other altcoins. Now instead we'll likely get a compromise. Binance will ensure that all user funds are stored within the US, I think is probably what's going to happen, as well as CZ being isolated from the business operations. And I think that we'll see a major offense against the SEC with crypto exchanges, crypto projects, investment firms and associated businesses all joining together to attack the SEC, motivated by their own survival. Interestingly, this coincides with the news that Bittrex US, the exchange that went bust back in May, will reopen tomorrow for customer withdrawals. There's around 300 million apparently trapped on the exchange currently that users are going to be able to cash out starting tomorrow. That's obviously great news, but what's interesting is that the government actually opposed this action, as they were concerned that if users pulled out their funds, there wouldn't be any money left for Bittrex to pay their fines and sanctions. I think that gives a clear insight into their actual goals with these actions, as opposed to protecting user funds. The Fed interest rate decision drops today with a near 95% chance that we'll get an interest rate pause, freezing rates at 500 to 525 basis points. This could be a major relief to all risk markets, and we should see a market pump in Bitcoin with the first time since March 2022 that we haven't had a raise in interest rates. This first hint of relief may indeed be priced in, and therefore not give us an incredibly spectacular pump, but it's definitely going to go a long way to start helping all risk markets recover. So with Binance averting disaster, the harsh economic environment clearing up, and USDT minting millions of buy the dip tokens, will we finally break out of this falling wedge? Well, the answer is maybe. With all the negative news of the past week, price has remained remarkably stable above 25k, with the weekly moving averages currently providing support. The hope is that the confirmation of the rate pause brings a flood of asset buys, Bitcoin, gold and equities as capital leaves the dollar. Yesterday's positive CPI data for Bitcoin was overshadowed with the potential Binance asset freeze, so we didn't really get to see the full impact of that positive news. What we have seen frequently though is volatility leading into the Fed announcements, as well as direction shifts post-announcement as the Fed chair speaks, giving clues to their thinking and reasoning. We're expecting that even if we do get the rate pause, that we're going to get a hawkish tone in the following speech. Yesterday's CPI data showed that whilst inflation is improving, it's still incredibly high. We see the impact of these bigger narratives on the total market cap chart, with money staying out of the sector as a whole, and this is where we really need to see a recovery for long-term success. The reason for this is that Bitcoin dominance is insanely high at the moment at over 49%, and this is really being driven by the recent SEC action. Bitcoin is standing up as a safe project against the others like XRP and even now Ethereum, who it appears, according to the Hinman emails, declared themselves not a security and then paid the SEC director to agree. The last time that we saw numbers like this was back in May 2021, when the market cap was around 2.4 trillion, 1.4 times its current market cap. And what that means is that Bitcoin right now, even if it doesn't feel like it, is probably relatively overperforming given the tiny amount of liquidity in the market. Either the dominance continues to rise to give us price rises, harming the rest of the ecosystem and capping growth, or we start to see the total market cap expand. So today, when we get the Fed announcement, I'll be keeping an eye on the total market cap chart to see if we're getting some fresh liquidity coming in rather than just Bitcoin pulling dominance from the other asset. Join our Discord for daily alt spot and future signals, copy trading, news updates, and conversation. Like if this is of any use to you, and let us know your opinions down in the comments.